Drawdown. Drawdown's a big deal. It's an important part of trading. Today, we're focusing on drawdown. All right, a couple of housekeeping items to get us started on the calculator. Up here on the right-hand corner, I have realized, and when we make a profit, we'll put it in this square, and this will be a percentage. So how much percent we're up. We're starting with a $10,000 account. Drawdown, this will be something we're now keeping track of. And so as we have positions open, we'll put how much the drawdown is, and that will also show as a percentage of our $10,000 account. So we can have how much drawdown we have, what percentage it is of $10,000, how much money we're making, and what percentage that is of $10,000. All right, let's get going. It is January 2nd, 2023, 0600. So 8 a.m. Eastern time, 6 a.m. my time. But this is where we're going to start. So it's 6 in the morning and the market has gone up. And so I am going to place a sell order because I think it's going to turn around and come back down. And we're going to sell at the market. You have to put in a take profit and a stop loss in FX replay. So I just put them far enough away from the market that they don't come into play. 1.2 and 1.5. And with our $10,000 account, we're going to trade 100,000 units. All right, so we're in the market. We sold 100,000 units. Now to protect that, we have to put in a buy stop. Now, I've shown examples of a 10 pip buy stop, a 20 pip buy stop, a 30 pip buy stop. Today, we're going to use a 20 pip buy stop. And our profit target is going to be 40 pips or more. In the last video, I used 50 pips just to show you can have some, trader choice there. But today I'm going to use a 20 pip stop order and a 40 pip take profit. So we're going to place an order, and this is going to be a buy stop. Remember, you have to put in a take profit and a stop loss. So this is I'm just going to put this far enough away from the market. It doesn't come into play. 1.5, 1.2, and we're going to go 20 pips above the market. So 1.35951. And we have to balance. So it's going to be for 100,000 units. So we have a buy stop for 100,000 units, and we have a live short order for 100,000 units. Let's put those in the calculator. 100,000 units and 100,000 units. We're going to play the market on a 5-minute play. That way we're kind of seeing the motion and we're not jumping way beyond our take profit of 40 pips or getting flash wins. So it's going to be as accurate as we can make it while we're practicing. All right, one thing I want to do is I want to measure out 40 pips. So 40 pips would be right there. That is our profit target. Get the market playing here. These are 1 hour candles so that we can see what time of day it is. And we're moving it forward 5 minutes at a time. Let's speed that up just a little bit. Take that to a 2 speed. And let's just see how it goes. It's 9 in the morning now. Still have not picked up our stop. I have not squozed this because this is a brand new position. So I'm just going to let that breathe at 20 pips. Keep the market playing here. It's now 11 a.m. You can see that down at the bottom, January 2nd. Now it's 12 a.m. We're now at 3 p.m. I'm going to keep my eye on it till about 8 or 9 o'clock at night. And then from there, I usually go to bed. So at 5 p.m., all right. So at 6 p.m., we bounced up and picked up our hedge. We're now fully hedged. It's late at night and we're fully hedged. I'm going to advance this to the next day. So if you go up here and you click on go to, you can go to next day open. There we go. So over the night, it went through, came back down. It did hit our profit, take profit, but it was at midnight, which we were sleeping, about faced, and now it's gone up. Let's see if we've gone up enough to take a profit. Remember, we're looking for 40 pips either way. So 40 pips would be right there. So we're well beyond our 40 pips. 6 in the morning. We woke up, and this is what we woke up to. All right, so let's trim our hedge. In our long position, we have a profit of $662. So we're going to put 662 right here for our profit. If you're trading lots, just so you know, 100,000 units equals 1 lot. So if you're on FX Replay and you're a lot guy, then just use 100,000 units. All right, so we have 100,000 units. It's out of the money. 862. So that's our loss. $862. Now, we're in the money, $662. We're going to keep $100. So basically 0.1% of whatever our unit size is. We're going to keep $100. So let's put $100 in our register. See how that shows up right here? $100 unrealized profit. And we're going to apply 562. So $562 gets applied, and we're going to trim our 100,000 unit position by 65,197 units, or 65.2% trim. All right, so let's do that. We're going to trim this by 65,197 units. And we're going to close the one in the money by 100%. Okay, so we no longer have this position. And we have a 34,803 unit position, and it has current drawdown of $300. So let's keep track of that, $300. So we have a realized gain of $100. We have drawdown of $300. We're at a 1% return, and we're at a 3% drawdown. So in this situation, you have a choice to make. You can balance your hedge, and you need to buy 34,803, or you can balance to capacity. And you have capacity to buy 65,000 or sell 65,197 units on the short side, and or buy 100,000 units on the long side. So I am going to balance to capacity. So in this situation, we're going to place a sell order at the market. You have to put these, the take profit and stop loss, 1.2, just because it's a long ways away from the market. It doesn't come into play. And I'm going to sell 65,197 units. All right, so now we have 65,197. And we have to protect that 100,000 unit position with a buy stop. And that's going to be 20 pips above the market. So 1.36813. And we're going to put 100,000 units right there. So when it's all said and done, we have a 34,803 unit position Down here, out of the money, draw down $300. We have a 65,197 unit position at the market and a buy stop position for 100,000 units. And we're going to advance the market 5 minutes at a time. All right, let's get to work. By the way, it's 6 a.m. Should we speed this up just a little bit? Oh, it was already there. Okay. 7 a.m. Ooh. So we're looking for 40 pips. Let's measure that out so that we have kind of a visual. That'd be 40 pips right there. We did not pick up our buy stop. Okay, let's give it another 5 minutes. Okay, in those 5 minutes, it just went right through it. So we have a profitable position. We did not pick up our buy stop, so our buy stop did not get activated. We can close that down. We have a 65,197 unit position up here that's in the money, $317.51. So let's put that right here, 317.51. Sweet. And we have the 34,803 unit position that's out of the money, $130.51. So we have $252 that we can apply, and we only need $130.51 to close out. Looks like we get to go flat and we're making a little extra money. So we'll have $65.20 that we're going to pocket, and then we're going to have 252.31 minus 130.51, an extra $121.80, which will take us to $287 of profit so far on this trade, 2.9%. We now have no drawdown. So we're going to clear our board here. We don't have anything on the books. We're going to close both of these positions 100%. And we have gone flat. The coveted flat, the coveted opportunity to clean the board and walk away with no drawdown. Yes. And what do we do when we go flat? We instantly, because it's 7 a.m., are looking for an opportunity to get back in the market. I have capacity of 100,000 units, both long and short. That's how much I can trade total. So I'm going to go long right here. We're going to place a buy market because I think the market's going to go up right here. And I'm going to buy 100,000 units. And we're hoping the market bounces and goes up 40 pips. But if it doesn't, we're going to protect with a sell stop. And we're going to do that 20 pips below the market. So 1.35926. So because the market's at 126, so it's going to be 1.35926, and that's going to be 100,000 units so that they're equally balanced. We are long 100,000 units, and we have a pending order for 100,000 units on the short side. All right, it's 7 a.m. We have our positions set up, and now it's time to advance the market. All right, we're moving at 5 minutes at a time. Ooh, it's bouncing. Let's give it a couple more 5 minute. There we go. So we hit our 40 pip target. We did not pick up our pending sell stop order, so we can cancel that. We have 100,000 unit position that's in the money, $406. So we get to pocket all 406. the coveted clean trade. Fancy. So now we're up $693. It is January 3rd, Tuesday, January 3rd. We've made a complete three trades. One of them we had a little extra profit on, and one of them we got clean. So we're up $693 or 6.9%. Oh, we got to close this 100%. And so now we're back looking for opportunity to get back in the market. I added this little profit ticker right here. These are the trades. So you can see exactly what the trades were as we're going through them. This adds up to be this number over here. I didn't have that on there, but I think it's useful for everyone to see each of the profits of the trades as we go on. Okay, so it's still 9 a.m. and we're looking for our next opportunity to trade. Market's gone up and then pulled back. Now it's going up. I don't really know, but I definitely want in the market. So I'm going to sell. I'm going to sell right here at the market. And I'm going to sell 100,000 units. All right, so we've got our 100,000 units on the short side, and we are going to protect that with a buy stop. And we're going to put that 20 pips above the market, 1.36732 for 100,000 units. All right. Now we're hoping this thing tips back over and comes back down and gives us another 40 pips. But we just don't know. Oh, we got to make sure we put 100,000 units on the board. So we've got 100,000 units long, a pending stop order for 100,000 units short, and we are going to advance the market 5 minutes. Just 5 more minutes. All right, let's go. Ooh. Okay, we're now hedged. Picked up our hedge. So now that we're hedged, we're looking for 40 pips to the upside too. So that's our grid right there. All right, it's 10 a.m. Let's get cooking. There's 11 a.m. 12, 1. Just kind of cruising along. That's 5 o'clock right there. So we're getting into the evening time. So I'll go till 2100, which would be 9 o'clock my time. All right, that's 2100. That's when I turn into a pumpkin and have to go to sleep. So up here, you're going to click on the go to, and I'm going to go to next day open. There you go. So I went to bed at 9 o'clock, and over the night, so midnight, 1 a.m., it rolled over. And this is what I woke up to at 6 a.m. So at 6 a.m., our short position is in the money, $1,015. And we're going to trim our outside long position, which is this guy, 100,000 units. He's out of the money, 12.15. So 1215 is our loss. We have 1,015 of profit. We're going to keep $100. That's it. Just 100 bucks. We're trading 100,000 units. We're going to keep 100 bucks. So let's put $100 over here on our ticker. We're now up 793, and we're going to apply this number, 915. So 915, which means we're going to close 75,309 units, or 75.3%. All right, so let's close 75,309, and we're going to close 100% of this. So on the long side left, we have 24,691 units, and we don't have anything on the short side. On the 24,691 units, we have a current drawdown of 300 bucks. So we got to put 300 right there. That's our current drawdown. We're up $793 of realized gain, and now we have a drawdown of $300. I noticed when I put the profit ticker in, it was covering up the order entry, so I moved it. Now it's up here. This will be our running ticker, obviously our calculator, and now our chart. So we have a long position of 24,691 units, and we're down here. Here is where the market is at 7 a.m. We obviously want to get back in. We have two choices. One, we could balance our hedge with 24,691 units, and that would be an equally balanced hedge. Or you can balance to capacity. On the short or on the long side, we have 75,309 units that we can buy, and we have 100,000 units on the short side that we could sell. So market's down here. I think the market is going to bounce and go up. So I am going to buy at the market 75,309 units. Okay, let's put that in the market, 75,309. We now have 100,000 units. We are at capacity on our long side. Now we have to protect and balance our hedge. So we're going to place a sell stop order, and we're going to do that 20 pips below the market. So 1.35317. Market is at 1.35517. We're going to go to 1.35317. And this will be for 100,000 units. Hit save. So now we have a 24,691 unit position that's long, a 75,309 unit position that's also long, and a backstop or a stop order to sell 100,000 units 20 pips away from the market. So the goal right here would be for the market to bounce up and not pick up our stop order. But if it does, then either way, we're looking for 40 pips in the money one way or the other. All right, let's advance the market. Okay, picked up our hedge. So now we're fully hedged. So we're going to put 100,000 units on the board. Everything zeroes out. Let's see, it's still 6 a.m. So we're still working through the 6 a.m. hour. Now it's 7 a.m. 8 a.m. 9 a.m. It's getting down there. So I'm going to just bump it forward. There we go. So at 9 a.m. in the 9 a.m. hour, our bottom position went in the money 40 pips. So we have 100,000 units short that's in the money, $396. So let's go 396 of profit. Our furthest outside long position is this 24,000 unit position up top, and it's out of the money 447.15. So 24,691, 447 is what it's out of the money, and we're going to apply $296. So $296 is what we're going to apply, and we're going to keep $100. So let's put $100 on our running profit tape here. So out of that 24,691 unit position, we're going to close 16,350 units. So let's close that 16,350, and we're going to close 100% of this position. Okay, so that leaves us on the long side 8,341 units. So 83.41. That is out of the money 151.06. 151.06. We also have a 75,309 unit position that's out of the money 448.84. 448.84. And we don't have anything on our short side right now. So just to recap, we have realized profit of $893, and we currently have a drawdown of $599.90, which is these two positions that are out of the money. So now we have a choice to make. Market is down here. We have 83,650 units already in the market on the long side. We could buy another 16,350 units. That would take us to capacity. On the short side, we're currently not holding anything, and we have 83,650 units we need to sell in order to balance our hedge. So the second choice you have is, are you going to buy or sell right at the market? For me, I'm just going to balance this hedge this time. 16,350 units is not a lot, so I'm just going to balance the hedge, and I'm going to sell them right at the market. So I'm going to sell at the market, and this is going to be for 83,650 units. And the reason why is I'm just balancing the hedge. I'm not balancing the capacity because we really have only trimmed off 16,000. So I'm going to balance the hedge. All right, we're going to hit save right there. So now I have 83,650 units on the short side, 75,309 units on the long side, and 83.41 on the long side. Total drawdown is 599. Total realized profit is 893. Our hedge is balanced, but we are not at capacity on this trade. We're looking for 40 pips to go down. If it bounces and goes straight up, then we're looking for 40 pips to the long side. It's 9 a.m., so let's see what this bad boy decides to do. Now it's 10 a.m. 11 a.m., 12 a.m., well, 12 p.m. 1, it's 2 p.m., 3 p.m., there's 4 p.m., there's 5 p.m., there's 6 p.m., 7 p.m., 8 p.m., and there's 9 p.m. Now, you don't have to sit there and watch it for every one of those hours. You can glance at the charts throughout the day. You can set up alerts. The only reason I say 9 p.m. is because I usually just check the market as I'm going to bed. And now it's 9 p.m. I'm going to bed because if not, I will turn into a pumpkin and I need my beauty sleep. So we are not in the money, and we are going to go up here to this go to button, and we're going to advance it to the next day. Next day for me, I have it set to wake me up at 6 in the morning. So at 6 in the morning, this is what I'm looking at. A whole lot more of exactly the same. Nothing has changed. One thing that's maybe interesting to do, we have 3 positions in the market. So let's break down our drawdown the next morning. So on the long position of 83.41, we have a drawdown of 145.22. So 145.22. And on our 75,309 unit position, we have a drawdown of 396.13. 396.13. And our 83,650 unit position, we have a drawdown of 58.55. So 58.55. I want to point out something. Our drawdown is still 599.90. If you want to rewind the video to go back, because we're balanced, we've locked in the 599.90. Even though all these numbers just moved, 599.90 is our current drawdown. All right, now time to move the market. 6 a.m. hour, looks like it's going up. There's 7 a.m. Ooh. Let's move this forward a little bit at a time. There we go. So in the 9 a.m. candle, it moved from clear down here all the way up and moved this 75,309 unit position into the money, 40 pips. So we have $299.73 to work with. So 299.73. And we have an 83,650 unit position that's out of the money, 831.48. So 83,650, 831.48 is how far it's out of the money. We are going to apply 224.42, 224.42, and we're going to put $75.31 in our pocket, 75.31. All right, so we're up $968 or a 9.7% return, and we are going to trim this 83,650 unit position by 22,577 right here. That's where I'm getting that number, 22,577. So let's save that. We're going to close 100% of this position. All right, so this guy is no longer in play, and this position is now 61,073. Let's look at our drawdown now. He's out of the money, 607.07. 607.07. And our 83.41 unit position is out of the money, 68.15. 68.15. Whoops. Put that right here, 68.15. So we are now having a drawdown of $675.22. We have a profit of $968.22, which is a 9.7% return and a 6.8% drawdown. And the market is right here, and we have a choice to make. What are we going to do? It's in the 9 a.m. candle. We have capacity to buy 91,659 units, or we can balance the hedge with 52,732 units, and we have capacity to sell 38,927 units on the short side. So I'm going to sell at the market. I'm going to go balance to capacity. So I'm going to sell 38,927 units. So 38,927. And I'm going to protect that on the long side, 20 pips up. So this is going to be a buy stop, 20 pips above the market. Market is at 1.35915. So we're going to go 1.36115. And this is going to be for 91,659 units. We're going to save that right there. So 91,659 units. So now we have 100,000 units on our long side. We're at capacity. We have 100,000 units on the short side. We're at capacity. And we are also balanced. If this were to trigger, what we're hoping is the market pulls back right there. If not, we'll be looking for 40 pips up right there. All right, let's get moving on the market. There's 10 a.m. There's 11 a.m. It's coming down. We're going to get there? Not yet. Got close, and then it's pulling back. There's one. So it got close, but not quite 40 pips, at least not on the 5 minutes. So maybe you could have trimmed right there, but we missed it. And that's fine. You're going to miss them along the way. So we missed that one. So now we're just cruising along. This is now 2 o'clock. There's 3 o'clock. Pushing down there a little bit. Volume's going down. Candles are getting smaller. So now we're at 4 o'clock. There's 5 o'clock. Ooh, 5 o'clock. So we almost had it in the 11 o'clock hour. It pulled back, and then it ended up coming back down and catching it around 5 o'clock. You had an alert set on your phone, and you are ready to trim that bad boy. All right, so 38,927 units to the short side is in the money, 159. That's our profit that we have to work with. And we're going to keep $38.93 of that. We did not pick up our buy stop. In fact, we really didn't even get close to it. So that was a lucky guess right there. We're going to cancel that order. And we're going to trim the furthest outside short position. We have $120 to work with. And this outside long position for 8,341 units is out of the money, $102. And we have 120. So we're actually going to make an extra $18 on this trade by closing these two completely. So we're going to close him. Actually, let's count for $18 because 120 minus 102 is 18. So $18. We're going to close him by 100%. We're going to close our short position by 100%. So all of these guys are cleaned up. This guy is also cleaned up, and we have a 61,073 unit position who is out of the money, $357.28. So 357.28. Just to recap, we have made $1,025.24 or 10.3%, and we have a current drawdown of $357.28 or 3.6%. This is all basing it off a starting balance of $10,000. All right, I'm just going to clear this off. So now we have a choice to make. It's 5 o'clock, so it's not really good trading time. But you're off balance on your hedge, 61,073 units, because you have 61,073 on the short side and nothing on the long side. You have a choice to make. What are you going to do? You have capacity to sell 38,927 units, or you have capacity to buy 100,000 units right here. I'm leaning towards a capacity program, and so I am going to buy at the market 100,000 units. Actually, I think I had one too many zeros. 100,000 units. All right. So I bought at the market 100,000 units. So now I have to sell 38,927 units to balance our hedge. And I'm going to put that in as a sell stop order. And we're going to do that 20 pips below the market. So the market is at 1.35506. So we're going to go 1.35206. No, sorry, 1.35306. Okay, it's 5 o'clock, so you're getting a little bit wore out. 38,927 units. And that will be our sell stop, 38,927. So we have a 100,000 unit position long. We have a 38,927 sell stop order, and we have 61,073 units short. If it goes down, then that will be where we're looking for 40 pips of profit. And if it goes up, then this is where we'll be looking for 40 units, 40 pips of profit. All right, it's 5 o'clock, so we got to get to 9 o'clock. Let's go ahead and advance the market here. There's 7 o'clock. No, 6 o'clock. There's 7 o'clock. Oh, there's 8 o'clock. There's 9 o'clock. All right, we still haven't picked it up. It's kind of gone flat. No surprise there. Not a lot of volume. We're going to advance to the next day open. Woo, buddy. We did not pick up our stop order. All right, so we have 100,000 units. That's in the money. 1080, 1,080. We are out of the money with our 61,000 unit position right here, 1,016. So we're going to go 61,073. That's the guy we're going to trim. We have $980 to work with. We're going to keep $100. And our loss is 1016, and we're going to apply $980. That's a 96.5% trim. It's going to leave us 2,164 units. And I know right now you're thinking to yourself, I should just close the whole thing. I would still have a net profit. And if you want to do that, that's fine. That's totally fine. So if you were to take your 1,080 minus 16.87, you would have a net return of $63.13. I think it's worth it. And you get to go flat, eliminate your drawdown. This is a judgment call. You could keep the 2,000 units, and I don't believe you'd be hurt. It's just 2,000. It'd be gobbled up pretty quick in the next trade. But in this scenario, we are going to go flat all the way. So I'm going to close the 61,073 unit position 100%. I'm going to close the long position 100%. We are now flat. So let's clear our board. Nothing on the board. We have made 1,088.37, 10.9% rate of return, and we currently have a 0 drawdown. It's Friday, January 6th. Okay. So you saw a bunch of trades. How many trades was that? 10 trades, 10 trims. And you saw the drawdown the whole way. I think the most drawdown was what, $675. Have to look back on the video. You had a 10.9% return on your investment. And yes, there is drawdown. There is operating capital. There is money in the market. You have I've had the analogy 1,000 times of a franchise, or let's say you have inventory and it hasn't been sold. That's like having inventory in the market or a position at cost of goods and you have not sold it. So, I mean, there's 1,000 business analogies around this. You will have drawdown in this strategy. It's a guaranteed. And it's true. You have to either have a clean trade or you have to squeeze it. I didn't even squeeze one. I just left them. You don't have to actually squeeze them. You can pick up pips that way. Or you could just let it ride at 20 pips. I just let it ride because it was, I think there's like, when I say all these things, everyone's like, oh, you got to do this. You got to do that. Well, you can do this or you can do that. I do think, however, 10 pips is a little too tight. It's a little too close to the sun. You're going to get that thing picked up a little too often, which will drag out your trade longer down the road. I also think 30 pips might be a little too much. You're going to have a little more drawdown, another third probably, which is fine. That's okay. You just have more, costs associated with your position. You're still going to net out a great return. So if you're getting chopped out, go to 30. If you're comfortable with 20 and you're going to have some that get picked up and a handful that don't, that's a win too. Bottom line is drawdown is inevitable in any form of trading. And if you think you're not going to have drawdown in any form of trading, you are oblivious to the markets. And right now you should close your accounts and just go home. Go grab a job that doesn't require any capital. You're going to have drawdown, period. There's just no way around it. If you want to manage your drawdown, that's fine. Take less positions, take smaller positions, don't trade to capacity. There's 1,000 ways to manage your drawdown in proportion to your account. And if you're a trader, you should have these numbers going through your head. You should know what you're wanting to do and how much exposure you want to have versus how much return you can get. So if anyone out there is worried about drawdown, you should be. There's no question in the last video, there was a lot of conversation around drawdown, and I may have discarded it cavalier because I'd already planned what my drawdown was going to be for my position. I apologize. I'm not trying to tell you what your drawdown would be or what your position size should be. I'm not a financial advisor, and I'm not going to give you that advice. Figure it out for yourself, for your risk tolerance, for your leverage, for your broker, whether you're trading units or lots or whatever, it doesn't matter. Figure out how much money you have and how much drawdown you're willing to experience along the way for a profit. That is up to you. And if you can't figure that out on your own, you need to learn the math or stop trading. If you ask in the comments, how much capital do I need to run this strategy? You should be figuring that out on your own right now. If you ask in the comments, what is your drawdown? This will never work. Your equity will just go to zero over time. I literally just showed you in the slowest paced video I could that is not accurate. You can do the math and you can figure it out on your own. And if you don't believe me and you don't want to take my word for it, jump on FX Replay and do it yourself. It's easy. It's fine. Backtest it. Open up a small account and trade micro units and experience it on a live account. I don't know how much more I could say, but to learn the strategy and figure out how to do the math and decide how many units you're going to trade for how much money you have so that you have a risk tolerance that fits you. I'm not going to tell you what mine is because it very well could be different than what yours is. My leverage is different. My capacity, my risk tolerance, all of those things are different. I will say there's times in the market where you're going to experience more drawdown than what we did in this video. And there's going to be times in the market where you're going to experience much less because the market moves in erratic movements. So err to the side of conservative. Plan for more drawdown than you'll ever need and trade away.